Hello and welcome to another Lincoln property blog. Brought to you by Ben from Walters of Lincolnshire, this week we look at the Lincoln property market update for May 2025. Are you considering moving home in Lincoln over the next 6 to 12 months? Or you may be a Lincoln landlord deciding whether to grow your portfolio or sell off a few properties. Or you're a Lincoln first-time buyer wondering if 2025 is the right time to move. Understanding whether the current property market favours buyers or sellers is key to making the right call. If you follow my regular Lincoln property updates, you'll know one of the most reliable ways to assess the market is by looking at the percentage of homes marked as sold subject to contract or under offer compared to the total number of properties on the market. Let's show this in practice. For example, if say there are 500 properties on the market in a location and 200 are under offer or sold subject to contract, then 200 as a percentage of 500 gives us a sales percentage of 40%. It is this percentage that strongly indicates the local property market temperature and who holds the upper hand, i.e. buyers, sellers, or somewhere in between. This percentage figure acts as a barometer for market conditions and can be analysed using this table. An extreme buyer's market is 0 to 20%. A buyer's market would be 21 to 29%. A balanced market is 30 to 40%. It moves to a seller's market from 41 to 49%. A hot seller's market is 50 to 59%. And an extreme seller's market is 60% plus. So how does Lincoln compare? Looking at historical numbers from the website The Advisory, which has tracked this metric for years, we can observe some key trends for each May since 2018. In the years before the pandemic, in Lincoln's market, the percentage figure was 38% in May 2018 and 36% in 2019, so a balanced market. Then in May 2020, which was the midpoint in the first lockdown, the percentage dropped, as expected, to 20%, meaning an extreme buyer's market. As demand rebounded sharply post-pandemic after the end of lockdown, and a year later, in May 2021, the percentage had risen to 58% and a hot seller's market. In May 2022, we were at 61% and in an extreme seller's market. However, with the fallout of the 𝐂𝐲𝐬𝐧𝐜𝐬 budget in late 2022 and increasing interest rates, by May 2023 it had settled to longer-term average levels of 32%. May 2024 saw similar levels at 30%. Now, we are in May 2025. We see the figure sitting at 33%, so we are back in a balanced market. These percentage figures are an average of all the Lincoln postcodes. For interest, if I break the May 2025 figure into the individual Lincoln postcodes, it does actually tell an even more interesting story. LN1 is 28%, LN2 is 39%, LN3 is 29%, LN4 is also 29%, LN5 is 34%, and LN6 is 36%. So what does a 33% sold subject to contract to total stock ratio for Lincoln as a whole tell us? It firmly places the Lincoln market at the lower end of a balanced market. That means neither side holds a dominant position, negotiations are nuanced, and buyers and sellers must bring their A game. For Lincoln sellers, we are now in a market where patience, presentation, and precise pricing are not optional but essential. With buyers enjoying more choice, it's no longer enough to simply list your property and wait. The standout homes are the ones that are priced right from day one, have strong photography, floor plans, virtual tours, and are marketed properly both online and offline. If you overprice your Lincoln home, expect it to linger on the market. And when a property lingers, price reductions follow, confidence drops, and you lose leverage in negotiations, often resulting in lower offers and a higher chance of fall-throughs before exchange. Getting it right from the start is more important than ever. That said, the May 2025 interest rate cut brings a welcome tailwind. With the Bank of England shaving 0.25% off the base rate, mortgage rates are easing, and confidence is gradually returning to the buyer pool. Here's why that matters. First-time buyers in Lincoln now face lower monthly mortgage payments, which could help more of them step onto the ladder. That brings fresh energy into the market and supports a healthy chain from the bottom to the top. Home movers may use better fixed-rate deals to upsize or remortgage, releasing more stock and unlocking stalled chains. Buy-to-let investors, especially those operating in high-yield areas of Lincoln, may find the numbers starting to stack up again, particularly with net rental yields improving as borrowing costs fall. Buyer confidence is getting a boost. Rate cuts send a signal. They show the bank wants to support stability and growth. That kind of message can turn wait-and-see buyers into let's book a viewing buyers. This recent interest rate cut is not a one-off. It's part of a series of interest rate reductions that began in late 2024. If the trend continues, momentum could build into summer and autumn. Lenders are already adjusting, with some 2-year fixed rate deals expected to dip nicely below 3.5% and 5-year fixed rate deals not far behind before the end of the year. Now, what does this mean? For Lincoln buyers, this property market is more measured compared to the frenzied pace of 2021 and 2022. There's room to breathe, to think, and in some cases, to negotiate. That doesn't mean you can take forever or submit lowball offers on the best homes. Desirable properties are still attracting multiple viewers, but it does mean there are opportunities, particularly for those willing to look beyond the most in-demand streets. Crucially, get your mortgage agreement in principle before you make an offer. It strengthens your hand massively. Sellers want certainty, and being financially ready sets you apart from others. Also, don't be afraid to widen your search boundaries. Often the best value is found just beyond the traditional hotspots. My final thought, with the new government settling in and inflation softening, this interest rate cut could help cement the stable period the Lincoln property market has experienced in the last 18 months. It's not boom territory, but it's not bust either. It's a continued return to something more balanced, considered, and sustainable. If you're thinking of moving in 2025 or just want to discuss your options, do not hesitate to give me a call on 01 522 512 513 or drop me a message on social media. To ensure all our clients get the absolute best experience and a total marketing strategy as unique as their homes, we only list 20 properties per month. Our May, June and July market appraisal slots are now available to book. We ensure that you are always a name and not just a number with Walters.